Hi there guys, my name is Sam and welcome to Financial Dragon. In this video we will continue the introduction to investing and discuss whether I prefer to invest in funds or individual stocks. There are many different sides to this debate and I'm excited to get into it. So click that like button, subscribe to my channel if you want to see more content like this, and let's get started. Before we start comparing stocks and funds, let's first take a close look at what a fund actually is. When buying an investment fund, you are essentially buying a bunch of different securities. In this video, we will focus on stocks though, and on the main two categories, passively managed funds and actively managed funds. Whenever you buy a fund, you are essentially buying a bag of stocks, and these stocks are in some way predetermined. If it is an actively managed fund, there's a group of professional analysts and managers taking care of it for you. They research the different companies and analyze market information before choosing which stocks to buy for the fund. So when you finally buy that fund, you are buying the stocks that they chose. If it is a passively managed fund, the stocks are also predetermined, but there's a big difference. There is some kind of rule or algorithm choosing the stocks. Passively managed funds are usually based on indexes, one of the most famous being the S&P 500 index fund, or SPY. In that example, there are certain preset criteria that go into choosing which stocks belong in the S&P 500 index. For example, the company has to be in the United States, have a market cap of at least $8.2 billion, and at least have 4 consecutive quarters of positive earnings. And by buying this index fund, you will buy a small share of those 500 or so American companies that meet these criteria, and some more. And since most companies that meet the different criteria of the S&P 500 generally do better over time and thereby increasing in price over time, you are simply ridding yourself of the hassle of trying to find the good stocks on your own by buying that fund. The same goes for actively managed funds. Except now you're buying a bag of stocks where the stocks are picked by a professional team, based on their judgment on what they deem to be a good performing stock. And when choosing which actively managed fund to invest in, some of the things we as common people can go by are the expense rate of the fund, the historical performance of the fund, and the focus market of the fund. For example, there are managed funds focusing on markets such as the pharmaceutical companies, the tech stocks, or maybe even gold mining stocks. I will discuss whether I prefer actively managed funds or passively managed funds in a future video. So by now you might be thinking, hey, funds sound like awesome stuff. Why should I ever have to analyze a stock myself when I can just buy a bag of stocks chosen by either some neat criteria that have been proven to work really well in the history, or by a bunch of professional analysts? And not to mention, while the actively managed funds usually have quite high expense rates, there are index funds that even have zero cost to them. And by buying one specific fund, you are getting the advantages of diversifying your portfolio while making as few decisions of your own as possible. And as you might already know, one of my big rules is to make as few decisions as possible while obviously putting a lot of time and effort into each decision. So what are the reasons for one to buy individual stocks instead of funds? Well, the main reason why anyone would ever want to invest in stocks is to beat the market. By buying index funds, you're basically admitting to yourself that the best returns you will ever get is the standard market return, or the index. Or if you choose to invest in an actively managed fund, you are putting the destiny of your own money into the hands of other people. Now, at first glance, it seems like a pretty sensible thing to do, since they are experts after all, right? But the actively managed funds themselves have to outperform the market, since they have quite high expense ratios to begin with. And additionally, these funds are forced to take on more high-risk, high-reward strategies to make crazy high returns for just a couple of years in order to look more attractive in our eyes. Because after all, the historical return of the past years of a fund is one of the only things we investors can look at when trying to decide what to invest in. But what this means for us long-term investors is that we can buy individual stocks, such as the blue chip high growth dividend companies, that are more safe and strong in the long term, while not being as flashy in the short term. thus giving us the opportunity to beat the market over many years. Another benefit when buying individual stocks is to, in some ways, time the market. Now, normally I never try to time the market since I believe it usually leads to emotional panic swing trading, but this is a bit different. Say you have found something like 20 stocks which you deem to be of high quality. At any point in time, some of these stocks will be overvalued, some will be fairly valued, and some will be undervalued. And as you do your regular monthly investing, you can always go for those cheaper, undervalued stocks in that portfolio. This is not possible when buying index funds, since you can only buy all the stocks in the index fund at the same time. So lastly, am I personally investing in funds or in individual stocks? Well, currently I am actually fully invested in a mutual fund that is invested in gold and silver mining companies. It is indeed a quite risky fund and a risky play, which I will discuss in future videos. But before I move to this fund, and after I move out of that fund, I will go back to what I know and love the most, the blue chip dividend growth stocks. And since I enjoy doing the research and finding the best dividend growth stocks, and since I like the possibility of buying stocks that are on sale at any point in time, individual stocks is what I prefer. But if I wanted a pretty similar return without having to do all that extra work, then I could invest in simple index funds for pretty much a similar return. That is it for today's video, guys. Comment down below if you prefer to invest in funds or individual stocks. Or really, any comment would be appreciated since it helps out my channel. And lastly, tap that like button if you found this video helpful, and subscribe to my channel if you want to see more similar content. Thanks so much for watching, guys. Peace.